Hello friends, welcome back. In this video, you're going to learn about RSI, a popular technical analysis indicator. Relative Strength Index, or RSI in short, is one of the most popular indicators used by stock market traders all over the world. RSI is a leading momentum indicator. That means it tells you about an event which is likely to occur in the near future. So in stock market, what is the event that we wish we know in advance? Trend reversal, isn't it? It's our dream to know when the trend of a stock price changes from downtrend to uptrend and vice versa. RSI helps us in identifying a trend reversal. Okay, so let's get into some nitty-gritties of RSI. RSI is an oscillator type indicator. Oscillator is something that moves between 2 points. Say, for example, a pendulum is an oscillator because it moves between 2 points, one on the left and the other on the right. So, since RSI is an oscillator, it moves between 0 and 100. And based on the current RSI value, you can set your expectations on the future stock price movement. Now, as in the case of other indicators, RSI is also not perfect, but we are increasing our chances to get the market direction right as far as possible. So, how can we use RSI in the trading? The objective of RSI is to identify overbought and oversold price areas. That's why it is also called OBOS indicator. Overbought means that there have been so much buying and the stock price has moved up so much that it may not be able to sustain it for a long time and there could be a correction. Imagine this like a rocket moving upward, and if it runs out of fuel before it could enter the space, it will fall down. So when a stock runs out of steam and there are no longer enough aggressive buyers in that stock, there are high chances that the stock price will start slowing down its upward move and may eventually turn around. Similarly, an oversold region indicates that there have been enough negative momentum and the steam is running out in that stock's downward move. Understood? So first of all, let's see how we plot RSI on the chart. On the charting tool, you select Relative Strength Index from the list of available indicators and enter a few parameters. The length here is 14, which is also called a look-back period. It indicates that last 14 days of closing prices are used to calculate RSI. You can also see upper band and lower band. I've kept the default values 70 and 30 for now. So when you set all these parameters, RSI looks like this. As I said earlier, RSI moves between 0 and 100. The area above 70 is overbought region and the area below 30 is oversold region. Okay? Let's see an example. This purple line below the price chart is 14 period RSI. If you see, the RSI scale is from 0 to 100. If you notice here, the RSI is below 30. It's at around 25. So here RSI is telling you that the stock is oversold. In this particular example, the RSI also coincides with a bullish engulfing pattern. Now, what is bullish engulfing? This is bullish engulfing. It's a candlestick pattern. Maybe I'll cover that in a separate video. Why I was telling you about bullish engulfing is because RSI is a very social indicator. It doesn't go alone. It has to be combined with other indicators or patterns to confirm the trend reversal. In our example, RSI below 30 and a bullish engulfing pattern gives us a double confirmation that this may be a beginning of an uptrend. Similarly, notice this level where RSI turns 89, a value which is considered to be in overbought region. You should be very careful if you are planning to buy this stock at this level. Again, if you notice the candles, they form a bearish engulfing pattern, exactly opposite of bullish engulfing. So, a bearish engulfing pattern backed by RSI of 89 is a strong sign of beginning of a downtrend. If you see, there was indeed a short correction in the stock. The example that I've shown here is quite ideal. That means both the candlestick pattern and RSI perfectly aligned to confirm the same event. This may not be always true. This leads us to another interesting way to interpret RSI. Imagine the following two scenarios. Scenario 1, a stock which is in a continuous uptrend. The RSI will remain stuck in the overbought region for a long time. And that's because the RSI's upper bound is 100, as you know. You may think that it's a short selling opportunity and the stock price may keep on rising. For example, Eicher Motors Limited, the company behind Royal Enfield. The stock has generated a return of close to 100% every year. Can you believe that? Scenario 2 would be exactly opposite. A stock which is in a continuous downtrend. RSI will be stuck in the oversold region since RSI's lower bound is 0. You may think it's a trend change and end up buying that stock. Let's say an example stock, Suzlon Energy. The stock has been painful for the shareholders. It has given a loss of around 34% every year for the past few years. These examples lead us to see RSI from a different angle. If the RSI is fixed in an overbought region for a long time, look for buying opportunities. RSI stays in the overbought region because of an excess positive momentum. And if RSI is fixed in an oversold region for a long time, look for selling opportunities. Of course, it happens because of a strong negative momentum. If RSI starts moving away from the oversold region after a prolonged period, look for buying opportunities. For example, RSI moving above 30 after a long time may indicate that the stock may have bottomed out and may bounce back. And last but not least, if RSI value starts moving away from the overbought region after a prolonged period, look for selling opportunities. For example, RSI moving below 70 after a long time may indicate that the stock might have topped out and may crash. Before we move ahead, don't forget to subscribe to our channel and hit the bell icon to get notifications when we upload new videos. Alright, so here are my final thoughts. The parameters used for RSI are not set in stone. Instead of 14 days look back period, you may use 5, 10, 20 or even 100 days look back period if you wish. In fact, this is how you develop your edge as a trader. You need to analyze what works for you. Please note, fewer the days you use to calculate the RSI, the more volatile the indicator would be. Also, it's not a hard and fast rule to use 30 and 70 for oversold and overbought regions. You can come up with your own combination. In fact, we prefer to use 20 and 80 to identify oversold and overbought regions respectively. We use it along with the classical 14 days look back period. You can start using RSI with default settings, but I strongly recommend you explore these parameters and see what works for you. That's how you evolve as a successful stock market trader. As a final note, do remember that RSI is often not used as a standalone indicator. It's used along with other candlestick patterns and indicators to study the market.